So I just listened to the earnings call and holy moly macaroni, NIO CEO dropped some very, very good news at the end of the conference call. So this is absolutely amazing, game-changing stuff, all right? 10% better than Tesla? What? What's that about? All right? And also not spending much money? What's that about? All right, we're going to answer all of those in this one video, go through all the game-changing stuff that he talked about. But first of all, going through some of the numbers very quickly, vehicle sales were US 2.174 billion in the fourth quarter of 2023. Vehicle margin was 11.9% in the fourth quarter of 2023. All right, total revenues was 2.408 billion US dollars. Loss from operations was US 933.2 million. And then net loss was US 756 million. Cool. Cash and cash equivalents, restricted cash at the end of the year of 2023 was 8.1 billion US dollars. They still got a lot in the bank. Research and development expenses were 559.5 million for the fourth quarter of 2023. This is all to be expected, all right? So some of the very key information that he revealed. First of all, this year's 1,000 4th-gen swap stations will mostly be public swap stations. That means it can be used by both the NIO brand and the sub-brand and the partnership brand. But there's even another big news along with that, and that was actually from the end of the conference call, and he said that this year they will actually minimize capex and utilize partners' resources for building swap stations, meaning that most of the swap stations being built this year will actually be some of the partner swap stations from Chang'an, from Geely. So those guys are going to be putting in the money to building public swap stations. And that's happening this year. So he leaked that at the end of the conference call. Very crazy. So, but some other stuff, brand unveil for the Alps sub-brand is in Q2. And then product unveil will be in Q3 and deliver in Q4. So we were not going to see the sub-brand take in effect deliveries of that until Q4 of this year. So things actually got pushed back a little bit. So we're only going to see the brand unveil in Q2 and not the vehicle itself. But the vehicle itself has already been ready since Q4 of 2022. So this car has been ready for 2 years and it's finally being delivered in Q4 of 2024 this year. Vehicle margins can get up to 16 to 18% through optimization. They said that there is very intense competition, and this year the primary focus will be on software to utilize the immense computing power that NIOs have. And NIOs, by the way, have the best computing power in the industry with all their vehicles. So now he also said that the sales staff has matured after hiring a lot of sales reps and polishing them off and trimming off the excess ones that aren't good enough. They have more matured and are ready to hopefully get back to 20K deliveries per month. And one interesting thing that they said was that the swap station strategy will focus mainly on improving sales, whereas before it was focused on maybe cheaper rent location, so it's in an obscure area or maybe on a highway resting area, so it's more for convenience. But now it's more for densely populated areas so that more people can see it. It's more for a marketing purpose. Very, very good. This is what we always wanted to see. And then he said that the sub-brand will focus mainly on the family market, well, exclusively on the family market, and they've done extensive research into the needs of the family market. And he said it will be a direct competitor to the Model Y, but can also swap. And you guys probably saw a picture of the leaked so-called sub-brand car. Here it is, if you haven't seen it. But another game-changing thing is that they said that the BOM cost of vehicle is 10% lower than Tesla and will be very competitive. So 10% lower? What? That's crazy, man. So this is definitely going to be very, very competitive, but can also swap. And then he also put out a timeline. So the second product is a bigger family SUV slated for delivery in 2025, and the third product is still under development and cannot release any further info at the moment. So then he said, from a tactical strategy, there won't be a car cheaper than an ET5 with the NIO brand. All right. All the cars on the NIO brand are focused on margins in the premium market. Focus on margins, and they will not trade margins for volume. So they will not do price cuts and that kind of thing. All right, those shenanigans won't happen. That also means that until the sub brand comes out, there won't be price cuts for NIO brand to boost deliveries. The deliveries will be what it is. All right. The second brand, however, will leverage the smart electric R&D that NIO has done over the years and will focus on volume first. They know that there's a lot of competition within that price range and that category, so they're going to focus on volume and do whatever is necessary and flip the table, according to the CEO. Overall, these two brands will have different strategies, but will also benefit the long-term health of the company. He also acknowledged that there's lots of competition in China and that partnerships are very important, and that their primary focus is still China, but will refine and polish operations in Europe. He also confirmed that the UAE is coming very, very soon. Okay, next year we will have a 100K RMB-ish new brand, aka the Firefly, so we'll have a larger coverage of the entire market. Now, China is direct to sales, but abroad, NIO will be more flexible and work with local companies for better return on investment and see what strategy fits best. They will not rule out the possibility of dealerships in overseas market. Now, when asked about 5C charging, he sort of dodged the question. He said that the charging business is already at break even. So no matter how fast, and he said no matter how fast people charge, it's still not as fast as swapping. And then NIO is still the most active brand in terms of charging station deployment. He also said that battery longevity will be a big problem for many peers, but NIO has also solved this. And this is, of course, with the battery modules, the battery cells. Every single battery pack has 32 cells inside, and they can be individually swapped out as well to prolong the longevity of the battery. And it's very easy for NIO to do, whereas for competitors, this is a very expensive and difficult process. And he said that usually warranty is 8 years or 100,000 kilometers or so for most companies. And replacing a battery will cause a super massive expense, and that is unreasonable. For example, 40 kilowatt hour battery pack, cough, cough, this is of course referencing Li Auto right there, costs 80 to 90,000 RMB to replace. So they will have to probably replace that after 8 years of use, whereas longevity of a car is around 15 years. So the focus is very much on the long-term longevity of the battery, how long a battery can live. Okay. Now, when asked about how much they plan to spend on R&D, and he said, well, the CFO said they will be consistent with 2023 spending, so about RMB 3 billion a quarter, around 420 million USD per quarter as guidance. So this is just basically unchanged. All right, so R&D expenses will not go down that much. Cool. Now, when it comes to supply chain, China is the largest market. They will utilize R&D to lower BOM, a cost of manufacturing, and supply chain optimization. And with the sub-brand car, they're able to achieve 10% better BOM than Tesla's Model Y by just producing 10,000 vehicles. Okay, so no, this 10,000 vehicles isn't the target. All right, the target is much more than 10,000 vehicles per month, but just by producing 10,000 vehicles per month, the cost of each producing each vehicle will be 10% cheaper than the Tesla Model Y, if I've made that clear. That's what they said. And he also said battery swap has achieved networking effect. Many peers that are working on battery swap are also considering joining us through battery swap to prolong the longevity of the battery. Now, more resources, swap stations for the third and fourth tier cities will be deployed. So their focus has to shift to third and fourth tier cities for more stores and more infrastructure there. He talked about how 500 stores for NIO right now is pretty much already good enough, and they're focused more on optimization. And we saw that at the end of 2023, they stopped publishing numbers for a number of stores opened, and this is pretty much in line with what I expected. And so also in terms of sales staff, 5,000 sales staff is also enough, so more on optimization. So the increase in stores and sales staff is not the number one priority anymore. However, the Alps brand will need stores and sales staff. So overall, about 200 stores across the main brand and sub-brand overall throughout the year. And also we'll secure some sales staff for the Alps brand first and have them ready when the Alps car launches. Now, Alps store will be more efficiently focused, so they won't be as big as NIO houses, and CapEx in 2024 will be significantly lower than 2023 because of they will utilize partners' resources for building swap stations. This is the big leak, guys. So finally, they're actually going to not spend that much money on swap stations and actually have the partners build the swap stations. This is great. This is exactly what you want to see. And remember, this is all using NIO's tech, so NIO's going to get some money from this as well. So instead of spending money, they're actually getting money. And there's more swap stations. How beautiful is that? But yeah, overall, very big loss though. All right, so hopefully investors can stomach that loss and see what's good about the company that's good to come and those optimizations coming. But what are your thoughts on earnings? Let me know in the comments down below. As always, stay safe, stay healthy. Peace out.